Hello and welcome everybody to the Fireside chat with the property company Stendörren. My name is Marcus Henriksson. I cover real estate and construction here at ABG Sundal Collier. I'm happy to have Erik Ranje, the CEO of Stendörren, here with me today.
Thank you.
We're going to have a bit of focus on the existing portfolio, a bit of a project potential, a little bit on the financing market, and maybe also something you would like to add on top of my questions. But first off, I would like you to tell us the elevator pitch of Stendörren.
Yes, thank you. And Stendörren is a listed real estate company. We are focusing on light industrial, logistics, and warehouse properties. We have some 12.6 billion of assets, and it's we are a very stable company in the sense that we have very long leases. We have average lease duration of 4.1 years. We are in a high yielding segment. Our properties yield 6.5% and we have a very diversified tenant base, some 800 tenants, and the largest tenant is the Swedish States. From the 1st of October is the Swedish Fortification Agency. The second largest tenant represents some 2%. So a very stable and strong cash flow. But I guess even more important, we're also a growth company. We are located in the Stockholm region. 1/3 of the portfolio is in the Stockholm municipality, and the rest of the property portfolio is basically in the greater Stockholm region or greater Stockholm region, i.e. Mälardalen. So we have a sort of rent potential in our portfolio as a result of the very urban sort of profile of the portfolio. We are obviously located in the growth region of Sweden, population-wise and economically. So that drives the rent level upwards going forward and historically as well. But then we also have a building rights portfolio. We have some 640,000 square meters of building rights to compare with 810,000 square meters of standing assets. So we have some growth potential of 80% should we sort of develop the entire building rights portfolio. So very stable company with strong cash flow, but a tremendous growth potential. And leverage-wise, 50% loan to value, interest coverage 2%, 85% of interest-bearing debt hedged with the remaining tenure of 3 years. So we have also sort of protected ourselves interest rate-wise.
Sounds like you have most of the things that one looks in a real estate company.
Exactly so.
And since you joined the company as a CEO around 4 years ago,
yes,
I think you've had a very impressive journey. Occupancy rate has been going from, what was it, 87, 88%?
Yes.
Now you're at 93,
yes,
even above 93.
Yes.
Could you tell us a little bit more? Are you at the peak or could you reach even further? What do you need to do to reach further? Do you have some tougher vacancies that will always be tough to lease out? Anything you can add there?
Yes, well, we did sort of decrease vacancy with half the level that was when I started, and then it has increased slightly the last quarters. So we are at 7% vacancy. The best or the lowest point was at 5%, and I think that is where it should be. What may be surprising is that the net leasing has been slightly negative over the last couple of quarters. One quarter was positive, but the net has been negative for some quarters. Gross letting has been very strong. As a matter of the fact, I think Q2 was the best quarter if we sort of set the lease to the Fortification Agency aside, because that was obviously huge, 129,000 square meters. If we set that aside, this was the best gross letting quarter. So the negative has been a little bit higher, obviously, then. And that is bankruptcy or companies who wants to downsize. So I think demand is quite strong, actually, and I think when we enter into a better business cycle, I think the level of bankruptcies and companies downsizing will obviously decrease. So I'm quite optimistic, and I think 5% is where it should be around, depending on where we are in a business cycle. I mean, there's always a churn, and upon a sort of when a tenant leaves, there is also always, almost always, a tenant improvement period for the next tenant to move in. So the normal situation is a downtime on a particular sort of location. Yeah. So I think 5%-ish is where it should be, depending on where we are in the business cycle. So I think we have a potential to improve it a couple of percentage units.
And then if we look at some other companies, they've been having the business model of when they are at 93 or getting up to 95% to acquire vacancies. Historically, you've done a bit of both, but maybe more focused on fully leased and then instead focus on your existing portfolio and cover up. Would you be able to focus in future acquisitions on acquiring vacancies and trying to lower them, or is that...
Potentially, yes. I mean, we have obviously had our own vacancy to work with before, and then, when we entered into, let's say, early 2022, then, Russia invaded Ukraine, and, we didn't make that many acquisitions. And at that point in time, we were at the 5%-ish. So I think that, and then what we have acquired also during the last couple of years has been in Helsinki, Oslo and Helsingfors, where we have some 5% of our portfolio. And we want to gain a critical mass there, so we will prioritize those markets. But since we do not have our own organization there and boots on the ground, so to say, then we want to acquire fairly dry assets, long leases, fully let. So therefore, our model has been not to acquire properties with a little bit of vacancy, but that could very well happen. I mean, where we are, we have a very strong leasing organization, and where we know we have a very clustered portfolio in the Stockholm region. And should we come up with or find a property to acquire there with a lease up potential, then we would definitely do that, because we know the market and we have a very strong leasing organization.
Yeah, that makes sense. If we look, I think one of the key attractions, projects aside, is that you've had such good renegotiation potential. So while many companies have struggled just to increase the rent by CPI, you've been way ahead of CPI for quite some time, even before you joined Stendörren, because the greater Stockholm region is so attractive. Could you help us a little bit in the next 1, 2, 3, 4 years? What do you see your current kind of rent in the existing portfolio versus market rent versus new construction project? Do you continue to see potential?
I mean, the dynamic is as follows for those who do not know us, is that in the most urban area, obviously, sometimes these industrial areas are converted into residential use. I have an example that you have heard before. Hammarby Sjöstad was once upon a time Lugnets industriområde in an industrial area. And therefore sort of supply decreases, but we are in Stockholm, demand increases, hence rents go up. And that is why we have a long-term rent potential in our portfolio. We have managed to, on the sort of leases which where we serve sort of notice for renegotiation, we managed to increase leases or the rents with 20 to 25% continuously, except for the last couple of quarters. And that is obviously a result of the fact that we are in a tougher business cycle, and we have made CPI adjustments of 10 plus 5% over the last couple of years. And I guess some of the tenants have also been sort of hit by interest costs and cost increases as a result of inflation as well. So it has been a little bit, or it has been less of rent sort of increase as a result of renegotiations. But my absolute firm opinion is that there is a systematic sort of embedded rent growth potential in these kinds of properties, in these kinds of areas. So I think when these sort of 10 plus 5% are a little bit behind us in time, and we enter into, let's say, a normal or even strong business cycle, then in my expectation, I think we will be back at 20-25%. That is long term in my view.
Interesting.
And then there was a second part of the question, I think, as well.
It was more like, we've been there, and then we come back to this kind of rent renegotiation potential. Yes. I think you covered it quite well.
Yes, thank you. Yeah.
So if we move a bit to financing, You were quite forward-leaning in your CEO statement in the Q2 report. You've been a bit more cautious in acquiring assets in the previous years, but now you say you see possibilities. Could you highlight how the financing market is and what you're seeing on the transaction market?
I think the investment opportunities on the acquisition side is fantastic. On the sort of project side, I mentioned earlier that the gross letting has been strong. It is on the negative side, the net letting has been sort of, the net effect is poor because of tenants leaving, downsizing, or bankruptcies or what have you. So I think on the project side, there is, since the gross letting is so strong, the demand is strong, we see quite strong potential there as well. So since I began as CEO, I think this is probably the best I've never seen as good market opportunities out there. And the capital is there also to finance it. I mean, we hope you saw that we did refinance a bond, and quite from considering the size of Stendörren, we issued a bond just a week ago of 800 million. It is the largest senior unsecured bond that we have issued at the price of 290 basis points. The cheapest that we had done earlier was 365 basis points. So, and it's the one that we refinanced and then also upscaled from 600 to 800 million. That was at 390 basis points. So it's 100 basis points down, and I think that is representative of how the financing market is. I guess the amplitude, or whatever you call it in English, is higher in the capital market, but we see the same sort of appetite nonetheless in the bank market. We see very strong appetite and very attractive financing from the banks. So I think everything looks really sort of set for doing good deals and growth going forward.
Sounds good. Hopefully we will see some acquisitions before year end.
Yes.
If we look a bit at projects and we go back to a few years ago when you started with your utilizing your product portfolio, now we're a little bit kind of the tempo have slowed down a bit. We are in a bit of a softer market. But could you highlight a bit the project potential? We glanced at it in the beginning, and then what we potentially could see in a normalized or maybe even in a strong market, and then what type of returns maybe we could see. Yeah,
in the last 4 quarters, we completed projects of representing 13,000 square meters. If we add 1 quarter, look back 5 quarters, then we can add an additional some 18,000 square meters. So then we are at 30,000 square meters over 5 quarters. I think that, and we did slow down. I mean, some of the projects, 18,000 square meters that we completed in Q2 last year, that was logistics. 6,000 square meters in Brunna, in just west of Stockholm, and then in close to Södertälje, Almnäs, 12,000 square meters. We started then on speculation, and they are now obviously completed the Q2 last year, fully let. But where we are considering where we are in the business cycle and considering where we are when there's a little bit of overhang and competition in different parts of the Mälardalen region, we are reluctant to start logistics construction on a speculative basis. Therefore, it has slowed down a little bit. But then, I mean, we are about to complete the project. We have our sort of the tenant Advania will move in our new the premises under construction as we speak, or about to be completed even, will move in the 1st of January 2025. That is 10,000 square meters. So we even if we look ahead, sort of, we are coming back to larger volumes. And we started, what was it, three projects the first half this year. So 3 industrial assets. I think they are 3,500. Now it's a little bit bigger actually, but now there are 3 industrial assets in the Mälardalen region. So we are sort of pushing forward now also on development.
So if we look maybe 6 to 12 months from now, we have the 5-year swap close to 2%. If we think about, are you gonna potentially continue with this interest rate hedging? You're at 85%, or is it time to be a bit more floating? Will you likely then buy something? It sounded like that. Project-wise, demand is not fully there, but demand is slowly coming back, and potentially Sweden will have a strong economy next year with interest rate cuts. Could you kind of paint a bit of a picture for the next 6 to 12 months for us?
Well, on the financing side, we did increase our hedging a lot end 2021 when we was starting to hear the sort of fear inflation, and the sort of consensus view was that this is just temporary, and then we sort of insured ourselves by buying a lot of caps at the strike of 2% at a ridiculously low premium. So that was a very good thing, and but over time they will sort of mature, and I think that we will decrease the percentage of hedging. But we are in a position where we are for sure monitoring the market all the time, and if a good opportunity comes up, then we will hedge. It tends to be good to be hedged now and then. So but 85% is a high number when it comes to hedging, even though it's caps obviously. So if interest rates decrease, we follow all the way down. It's just a roof. But now we will be opportunistic in the sense that we are monitoring the market, and we can very well hedge more. But my assumption is that we will decrease the amount of hedging. Yeah.
And then in terms of leverage, you mentioned initially around 50%. You issued the bond now. Do you see yourself gearing up in the next 6 to 12 months, or quite fairly stable and just to use the cash flow you have?
We have the capital structure that's we think is adequate. Loan to value 50%-ish, and we have an interest coverage rate of 2 times, 2.0. So I think that is where we should be. That is where our policy is, and I don't see any reason why we should change that really. Yeah.
Good. I think we have covered most of the things today. Any concluding remarks you want to highlight for us? Or?
Well, it's more that I am, as you may have understood already, quite optimistic. And there's a tremendous amount of opportunities out there, and I think we have the capital structure and willingness to grab that opportunities.
I don't think the reader or me need to read between the lines here. It's very clear.
Good.
Thank you for listening in today. Thank you.
Thank you.